Scene script. Ever pondered how a select few control the lion's share of wealth? It's not some mystical force at work, it's what we call the fractional reserve system. Imagine this scenario. You've toiled, squirreled away savings, and now you're about to stash it in your bank account. You bank on your bank to guard your money securely, correct? But what if I told you that your bank isn't merely hoarding your funds like a mythical beast atop a treasure mountain? Here's the crux of the matter. Banks function within the confines of the fractional reserve system, which essentially implies they're obligated to retain merely a fraction of your deposit in reserve. If you entrust $100 to them, your bank might only safeguard 10, the remainder, it embarks on a life of its own. So, where does the bulk of your money end up? I assure you it's not sunbathing at an exotic escape, it's utilized to grant loans to others. Sounds beneficial, doesn't it? Aiding others to elevate themselves, perhaps to establish a business or procure a home, but there's more beneath the surface. The bank isn't merely doling out charity, these loans yield interest and this interest morphs into profit. But hold on, there's more. Your deposited money can also be employed to venture into other investments. Hence, your sweat-earned money isn't just idling in a vault. It's out there, laboring intensely, akin to you. The pertinent question here is, however, for whom is it truly laboring? Quite an ingenious system, wouldn't you agree? Banks employ your money to multiply their wealth. The icing on the cake? They aren't even obligated to inform you about it. All thanks to the fractional reserve system, this is entirely lawful. Therefore, in a nutshell, the money you entrust to the bank isn't merely dormant there. It's on the job, but who exactly is it working for? Welcome to the fractional reserve system, the puppeteer's invisible strings. Complicated? Not really, so where does all the money end up? Let's delve deeper into the enigmatic world of the fractional reserve system. Fundamentally, this system is a financial dance where money twirls from depositors to borrowers. Picture yourself depositing your hard-earned cash in the bank. You're not merely hiding it like a squirrel with its acorns. No, dear listeners, you're engaging in the grand waltz of the banking world. Your money isn't stagnant. It's more akin to a hyperactive child on a candy spree. It's loaned out to borrowers, be they a newlywed couple seeking a mortgage or a business planning to expand. Here's the twist. Banks are required to keep only a fraction of your deposit in reserve. So, where does the rest of your money go? It's loaned out naturally. And with every loan, the banks are like popcorn sellers at a movie theater, earning their profits from the interest. Each loan, each interest payment, is a golden popcorn popping into their cash registers. Now you might wonder, who's overseeing this carousel of cash? That's where the central banks enter the scene. They are the umpires, the watchdogs, the guardians of the system. They determine the reserve requirements, deciding how much of your deposit the banks need to keep in their safes. But not fool ourselves. This isn't some charitable venture. It's a precisely calibrated machine designed to churn out profits. The banks are like illusionists, conjuring money from nowhere, multiplying it, and reaping the profits from the interest. And who's at the core of this system? The bankers, indeed. They're not merely the puppet masters in this grand financial spectacle. They're the maestros, conducting the symphony of money that flows from your wallet to the borrowers and back into their safes. In this elaborate choreography, the bankers are the puppet masters and we, the depositors, are the puppets. Who founded these banks and this fractional system, you ask? Who is this group of elites by name? That is a topic for another much longer video. This is just a general one, a bringing of one to the rabbit hole per se. Best not go into far just yet. Now let's delve into the shadows. Who are these puppeteers, and how do they benefit from our hard-earned money? Picture this, a game of chess. The players, the world's elites. The pieces, the financial institutions, the banks, the money we trust in. The game board, the global economy, and the rules? The rules are defined by something known as the fractional reserve system. The fractional reserve system, as we've uncovered, is a banking system where only a portion of bank deposits are backed by actual cash on hand, available for withdrawal. This allows banks to use the rest of the money to make loans, essentially creating new money. But how does this tie in with the world's elites, those who seem to sit on top of the world, untouched by the financial woes and worries of everyday people like you and me? Well, hold on to your hats, folks, because this is where things get interesting. You see, the fractional reserve system is like a golden goose for these elites. They own or influence the banks that employ this system, and as these banks create more money through loans, the elites get a larger slice of the pie. They accumulate wealth, not from the sweat of their brow, but from the mechanics of a system they help to create and continue to control. Moreover, it's not just about accumulating wealth, it's about control. By controlling the banks, the elites control the flow of money. They decide who gets loans and who doesn't. They determine which businesses thrive and which ones fail. They shape economies, influence governments, and, in a way, steer the course of history. But remember, this isn't about demonizing the wealthy or the successful. It's about understanding the system, the game of chess, and recognizing the power dynamics at play. Just as the puppeteer controls the marionette, the elites control the banks, and ergo, the money flow. So we've seen how the elites benefit, but what about us, the common people? In the grand theater of the fractional reserve system, we, the common people, are more than just spectators. We're the actors, the set pieces, and the props, playing our parts in a spectacle we hardly understand. Our hard-earned money fuels this system, yet we often bear the brunt of its failures. Consider this. You deposit your paycheck in the bank, and the bank loans out a portion of it to someone else. This is the heart of the fractional reserve system. The bank keeps only a fraction of your money while the rest is loaned out, earning the bank interest. Sounds simple, right? But let's dig a little deeper. The money that the bank loans out eventually finds its way back into the banking system, and the process repeats. This cycle of depositing and lending creates new money, inflating the money supply. Now, if you remember your basic economics, an increase in the money supply can lead to inflation. And who does inflation hit hardest? Not the elites with their diversified portfolios and offshore accounts, but us, the common people. Our purchasing power diminishes as the cost of living rises, and our savings lose value over time. Furthermore, the fractional reserve system can lead to economic instability. If everyone decides to withdraw their money at the same time, a bank run, the bank would not have enough cash to pay everyone. This can trigger a domino effect, causing other banks to fail and leading to a full-blown financial crisis. And guess who suffers the most when the economy tanks? You got it. Us, the common folks. The elites with their deep pockets and financial cushions can weather these storms. But for the rest of us, these crises can mean job losses, foreclosures, and a reduced standard of living. Ironically, while our money fuels the system, we bear the brunt of its failures. Now that we've peeled back the layers, what's the real truth behind the fractional reserve system? Let's rewind a bit, shall we? We've delved into the murky depths of the fractional reserve system, a banking framework that, at first glance, seems as harmless as a kitten. But as we've seen, there's more to this feline than meets the eye. In essence, the fractional reserve system allows banks to lend out more money than they actually hold in their vaults. It's like a magician pulling rabbits out of an empty hat. The trick, of course, is that the rabbits were never really in the hat to begin with. They're simply illusions, carefully conjured by the magician's sleight of hand. But who are the magicians in our story? Who has the power to create money out of thin air? The answer, as we've discovered, is the world's elites. These puppet masters, hidden behind the curtains of power and wealth, are the ones pulling the strings of the fractional reserve system. They're the ones creating money from nothing, profiting from our hard-earned savings, and manipulating the economy to suit their needs. And what about the common man, the unsuspecting audience member in this grand performance? We're the ones entrusting our money to the banks, unaware that it's being used to fuel a system that benefits the few at the expense of the many. We're the ones feeling the impact when the economy takes a hit, when the illusions shatter and the truth is laid bare. So what's the real truth behind the fractional reserve system? It's a tool, a mechanism controlled by the elites, used to maintain their hold on power and wealth. It's a system that, while seemingly benign, has far-reaching implications for us all. So, next time you deposit your money in the bank, remember, you're not just saving, you're playing a part in a much bigger game.